LiteFinance, the world of financial freedom.
Hello, it's Monday, 5th of September, and it is time to start the market forecast. This week will be under the sign of central banks and the rate hikes all over the world through Europe, North America and Australia. So it promises to be an interesting week for us traders. So without further ado, let's begin with the macro calendar and then we will move on to discuss some particular examples in more detail. Okay, so today the US and Canada has holidays, so second part of the trading session can be less volatile on FX. On stocks there will be no trading at all. As for the data, we got another PMI numbers for services, this time from UK, Germany and Eurozone, which are okay to be honest, still on the verge of contraction. Only Germany got a bad reading, which was around 47 points. As I am making this video, the OPEC meeting has started, so we will get the info how big the oil output will be in the near future. Then we have Tuesday with the RBA interest rate decision, which, as you probably guessed, is intending to raise the benchmark from 185 to 235%, which means by 50 basis points. Next, we have non-manufacturing PMI from the US, and then we can go to Wednesday. And so Wednesday starts with the GDP figures from Australia, then the Germany and Eurozone. Apart from GDP numbers, Bank of England Governor Bailey will hold a speech, and then Bank of Canada will announce its interest rate decision, which again consensus is forecasting that the BOC will raise the rates this time by 75 basis points from the current 250 to 3.25%. Still on Wednesday, we will get IV PMI from Canada, EIA Energy Outlook, and Beige Book from the US. And so the most important day will be Thursday, which will start with the GDP figures from Japan, and then in the afternoon we will have the ECB rate decision, where we anticipate the 50 basis point rate hike from the European Central Bank. After the decision, we will get a press conference with further guidance as for future ECB moves, and simultaneously Fed Chairman Jerome Powell will hold a speech at the annual monetary conference, which is slightly less important, but nevertheless we can get some new information. At the end of the day, we will get crude oil inventories, and finally we will have a Friday, which will bring us inflation data from China and labor market figures from Canada. Okay, that is all as for the calendar. Let's discuss situation on a particular asset, and we will talk about the Euro USD. So the European currency shows a slight decrease, testing the level of 0.9900 for a breakdown. The Euro USD pair is holding near record lows updated on August 23rd and remains under pressure from pessimistic economic forecast for the region. Inflation in the EU is held at record levels, while decisive action by the European Central Bank aimed at tightening monetary policy is leading to a recession in individual economies of the Eurozone. However, the monetary policy of the European regulator can hardly be called aggressive so far, because interest rates have been raised so far only once. As we discussed, the next meeting of the ECB will be held on September 8, and it is expected that the regulator will adjust the value by another 50 basis points to 1%. Meanwhile, European countries are also forced to look for a solution to the energy problem. Gas prices remain at record levels, and given disruptions in supplies from Russia, they may increase in the near future. At present, the bloc members have agreed on the introduction of a ceiling in prices for oil and oil products from December, but the supply of blue fuel remains a more painful issue. In early September, PJSC Gazprom suspended the operation of the only turbine on the Nord Stream gas pipeline for technical reasons. There was no further information about the timing of the possible resumption of work. So overall, nothing changed so far, and the trend looks like it will continue downward. The energy prices are rising, which means economic activity will decrease more, less goods will be exported, more money spent on commodities, i.e. more euro will be exchanged for dollars. A spread in interest rates between the euro and the US dollar is still wide, more goods will be imported than exported, and most likely this will mean a further downside pressure for the common currency. So from technical standpoint, we see divergence on MACD, but it is rather a long and mid-term signal, which means that it can turn around, but we could wait a bit more for this reversal. And for now, we receive a signal for a short trade. The market is almost sure as for the ECB rate hike, and it can be already priced in, which means the effect on the price might be not significant enough to keep the euro above parity. Okay, that will be all for today. Thank you for watching, and till next time.